The following is an independently produced program. The views expressed within are not necessarily the views of WAVS Radio, its staff, or management, but are strictly those of the hosts, guests, and callers.
Waves 1170.
1170 AM. It's Sunday night in the Caribbean, man. Hubert McIntosh is a member of the Society for Financial Awareness, and he's the man.
Financial literacy provided by Hubert McIntosh.
CPA.
Financial literacy. Control your financial status.
Here's your host, Hubert McIntosh, CPA.
Good evening, good Sunday evening. Thank you for joining us for another beautiful Sunday evening in South Florida. This is Financial Literacy. This is Hubert McIntosh, your host, your CPA, a member of SOFA, the Society for Financial Awareness. SOFA's mission is to help eradicate financial illiteracy in America, one community at a time. And I've joined with SOFA to start with this community. So thank you for joining us. Tonight's program is a very interesting program. It has been broadcasted. You have been seeing it on the internet, on the social media sites. Remember, we have a website, financialliteracy.info, financialliteracy.info. We have Facebook, we have Twitter, so you can make your comments there. The program that we have advertised for tonight is 9 easy ways to reduce your tax bill. It's tax time, and some of you have filed already. Some of you are getting ready to file. I'll be sharing some tips with you. Some of them you may be able to take control of. Some you may not be until next year, but at least you will have heard about it tonight. The phone lines are open. 954-792-1170, 954-792-1170. We're here to take your calls. So call in, any question, any comments on your mind, we're here to address it. But you can also visit us on the web, financialliteracy.info. You can email us, support@financialliteracy.info, and we will get back to you within 24 to 48 hours. So as I said, tonight we're going to talk about taxes. But as a spillover from last week, I want to touch on something, continue on something that we spoke about last week, the last 2 weeks, insurance, clearing up the confusion. This week I've gotten quite a lot of calls and quite a few comments regarding life insurance, and particularly the ones that have touched me this week. I think it has been 2 or 3 occasions this week where in our community, one of the challenges that we have in our community that I'm going to speak about, I want to touch on it briefly, whereas people are dying and there's no money to bury them. There's no money to bury them. And in a lot of cases, that's inexcusable. I have shared some stuff with you. I've given you an example, and I just want to touch on that. Life insurance nowadays it can be so inexpensive in the sense that life insurance is not just cash value insurance. You also have term life insurance, where basically you can get death benefit. But the key part of it, why I want to stress the death benefit, it's not even just for death. You remember last week and the week before, I introduced you to living benefits. Living benefits, that simply means if someone gets ill and they have a life insurance, they can accelerate those living benefits. And I just want to emphasize and remind you guys of that. You need to get your insurance checkup. You need to get a checkup. You need to get it evaluated. If your insurance is not the smart insurance, you need to contact your agent. You need to contact the company. Get an evaluation. Find out if you have a smart insurance. Remember, we use the example with the smartphone. Telephone 30 years ago. was just, your cell phone was just for calling and making calls and receiving calls. But now that phone is now a smartphone, where it's basically a computer in the palm of your hands. It's the same way with life insurance. Life insurance, you have smart insurance. So I want to encourage my community out there that, look at your situation. If you don't have, I gave you an example last week and the week before. A 45-year-old person can get an $500,000 policy, $529,645 for 45-year-old, and this is a male, 45-year-old male. For less than $100, you can have a $500,000 policies. So I want to encourage you out there. It doesn't mean you have to get a $500,000 policy. It can be $250,000. It can be 100,000. It can be 20,000. You need to have something in our community. One of the challenge out there, and it is scary and it is frightening. People are dying and people are going on the internet, on Facebook, begging money to bury their loved ones. Folks, that's why we're providing this literacy for you. We don't have to do that. It's so inexpensive that we don't have to do that. And I just wanna implore you, I just wanna encourage you that we can make some preparations. It's almost inexcusable. It's almost inexcusable knowing that you can get policies for less than $100 a month, less than $50 a month, in some cases $30, $40 a month. But seek professional guidance. And I just want to encourage you on that. That's with the life insurance. And also, I want to talk to you about health insurance also. Health insurance, yes, there are lots of controversy out there. Which plan is good, which plan is not good. But it's always good that you can get professional guidance, because you can get a high deductible plan. A high deductible plan in the sense that the premium will be lower than if you get a low deductible plan. And it's not just that alone, because we're going to talk about tax benefits tonight. With a high deductible health insurance plan, you may be eligible for a HSA plan. That's a health savings account, where that becomes a tax deduction. So there are multiple benefits, but sometimes if you're going off just by what you know, sometimes you don't know your options. So I encourage you to seek professional guidance. We have come alongside you. We want to guide you. We want to guide you in this path. Reach out to us. Reach out, financialliteracy.info. We are on the web. Email us, support@financialliteracy.info. The phone lines are open, 954-792-1170, 954-792-1170. Call us. We are here in the studio, so I just want to, it sounds like I'm sounding like a broken record, but I just want to encourage you guys regarding that smart insurance, about the living benefits, because you have the statistics out there. I've shared the statistics with you, where it says that for each person that passes age 65, 70% of them is gonna need some care. 70%. That means if you line up 10 people, 7 out of those 10 people past 65, they are going to need some care. And if you don't have a plan that provides chronic care or some kind of a long-term care, then you are going to left holding an empty bag. And I just want to let you know that there are life insurance that can cover those things, because they have living benefits. And I will quickly repeat some of the living benefits that are included in life insurance. But you have to check, because not all companies have it. ALS, Lou Gehrig's disease, aorta graft surgery, aplastic anemia. And I know some of these names we're not familiar with, but it just shows you the level of coverage that you can have. Blindness. How many of you know that you can have a life insurance policy and then if blindness strikes, then you can accelerate some of that death benefit? A lot of people get blind, like especially someone with diabetes. Diabetes is also whereas a person reach a certain age and then blindness strikes, and then if you have nothing, then you know it's extra care to take. It's extra expense to care for that person. Cancer, cystic fibrosis, end-stage renal failure. We spoke about that last week in detail. Sometimes you'll hear the name end-stage renal failure and you're not familiar with it, but it's a kidney. And we call it kidney disease. We call it kidney failure. But those are not medical terminology. The terminology is end-stage renal failure. Another one, heart attack. Heart attack is one of the number one killer out there. But the thing is, not everyone who gets an heart attack dies. But sometimes they need care. And if they don't have that extra money, then that care becomes a challenge. Heart valve replacement. That's another one. And look at the difference there. Heart valve replacement. We spoke about this last week. Heart valve replacement and heart attack. It's two different conditions because sometimes someone can have a heart valve replacement, but they never had a heart attack. But if you have a plan that you can get these benefits, how comforting. Not that, comforting in the sense that if grandma, ma, or even yourself needs care, then a family member or a friend can come beside you because you have the finance to help them if they are not at work. These are the things, the power of living benefits where you can accelerate that death benefit. So it's like we spoke about that $500,000 death benefit. If that happens to someone and they can accelerate 90% of that $500,000, they can have $450,000 to help with their care and their treatment. So these are the things we're encouraging you with. Major organ transplant, motor neuron disease, stroke, sudden cardiac arrest, coma, paralysis, severe burns, traumatic brain injury. And that's just a few of the living benefits that there are. And please keep in mind, like I mentioned to you, the living benefits just does not necessarily mean that it's with just the cash value policy. Sometimes you may hear an agent tell you that it's with the cash value policy, but it's because that's what that agent provides. Remember, you have options. Just because that agent may not have that in its toolbox, then you can seek a second opinion. You can seek from someone else to find out what are your options. It's like you go to the store. There's stuff you're going to find at Walmart that it may not be at Walmart, but you get it at Publix or vice versa. The price may be different. The quality may be different. It's the same thing, folks. It's the same thing with insurance. You have 855 insurance companies in America. They all don't provide the same product. Oh my gosh, that clock on the wall. I tell you last week, I believe the fastest hour of the week is Sunday night between 9 and 10. I get in there, that clock just runs off. I got a break. I got to go pay some bills. So stick and stay with me. We're going to be right back. Thank you. Welcome back. Thank you for sticking and staying with us. Well, I think we have beaten the life insurance thing to death. We're gonna move on. I don't want to bore you guys to death, but I just believe it's such an important topic that we need to talk about. So, we're gonna move on to some tax savings. That's what we had promised you for this show. So we're gonna share with you 9 easy ways to reduce your tax bill. And please keep in mind, that the reduction that we're going to talk about, sometimes all of them may not be applicable to you, but they may be applicable to a family member or a friend or, you know, a parent, some you know. So just get your pen and your paper and take some notes, because as you know, this is Sunday school at night. So I'm going to share some things with you. Some of them you may not have heard before. So if something triggers in your mind there, you know, you have your pen, you have your paper, you can take notes, okay? And so please remember, we spoke about health savings account. I think it's fair enough that I just dropped that hint there. You know, with a health savings account, it's a tax deduction on your Form 1040. For those of you probably have filed already, or you getting ready to file, the health savings account deduction is on line 25 of your Form 1040. Every individual in America has to file a Form 1040. So in a lot of cases that most of you may be eligible for it. But with a health savings account, you have to have a high deductible health insurance plan. So keep that in mind. If it's a low deductible, you're not going to be eligible for the health savings account. But one of the great power with the health savings account is the fact that you're putting that money in and you're getting a tax deduction. So you're getting a tax deduction right off on line 25 of your Form 1040. And in previous weeks, we spoke about qualified plans, IRA, 401k, and stuff like that. And those things, you do get deductions also. But the difference with that, those are tax deferrals where you'll eventually pay the tax. But the beauty with the health savings deduction is that if you have accumulated a certain amount in that health savings account and the deduction from it is paying medical bills, if you're paying medical bills or prescriptions or anything health related prescription wise, then that is also tax free. So how better can you get? You put in the money in, you're getting a deduction, and the money is coming out tax free. So in this particular case, it's not tax deferred, it's tax free. So I want to point that out to you. So when you're doing your insurance, it's always good to get that evaluation. So the person that you're talking to, always try to get someone who can use a tax reference, you know, any financial representative that you're talking to, because your life is so driven by taxes, in the sense that whatever financial decision you're making, always look towards the tax implication. And if the person cannot help you with the tax implication, maybe you need to get another person, you know, because don't just do things and don't realize the tax implications. Okay, so we're going to dive into the different tips. One of the things I want you to remember, the first tip there is to reducing your tax bill. Remember, the IRS changes the tax code and has rules that phase in and phase out. So because you may not have been eligible for something last year, and you may go to the tax preparer, and the tax preparer says, well, we look at your profile, you weren't eligible for it last year, so you're not this year. That is not true. Remember, the IRS often has specials. Yes, specials, just like you may go to your favorite diner and they have temporary sale or stuff like that, you'll see on the TV restaurants, like even Red Lobster, where you hear this special this time and special that. The IRS does give special, and sometimes that might be frightening to people into believing, okay, they don't give. Yes, they do give special as needed. Like sometimes the tax code is amended because mid-year. Tax code is not just amended at year end. It amended mid-year depending on the economic circumstances that are driving the need. Sometimes it could be a disaster in a particular area. There's something where at one point in time we had something called Make Work Pay Credit, where each individual would get $400 back on their tax refund. So you have different changes per year. So be careful about filing your taxes yourself, because if you're not up on the knowledge, knowing the changes, you may be avoiding and you may be losing out on deductions that you could have claimed. Okay? The phone lines are open, 954-792-1170, 954-792-1170. This is Hubert McIntosh, your CPA, a member of SOFA. SOFA is a Society for Financial Awareness with our mission to help eradicate financial illiteracy in America. I share that statistic with you where FINRA, the Financial Regulation Authority on finance, say that Americans, 74% of Americans are financially illiterate. That is a scary statistic, 74%. But this program, we have launched this program on this station so that this community will be able to brag that we are not in that 74% because we are hoping to get you financial literate, and that's why we're having Sunday school. Okay, so thank you for joining us. The number 954-792-1170. So as I say, with tax tip number 1, the tax code is constantly changing, so you can't compare one year to the next year. Always look at the coming year as a new episode or a new chapter in a book. So if you have already filed your tax returns, one of the things you can do is, a lot of tax professionals give second opinions, and a lot of times these second opinions are complimentary. Like for instance, if you go to the doctor mentioned an ailment or something like that, and to get easiness, sometimes you want a second or a third opinion. You can also do that with your tax return. You don't just have to accept what was done. If you suspect, or even if you don't suspect, there's nothing wrong with getting second opinions, because as I said, the tax code is constantly changing. Okay, that's tax tip number 1. Tax tip number 2, and this happens to some people where sometimes they don't realize they may have a CD. They may have a CD, whether it's a 6-month CD or a 12-month CD, and they may cash out some of the money. And because they may cash it out before the CD mature, sometimes there's a penalty. I just want you to be aware that the penalty is a tax deduction on line 30 of your form 1040. So if you look at your 1040, that you're filed or you're preparing to file, the penalty on early withdrawal of savings. It doesn't say CD, but keep in mind it says on early withdrawal of savings, and the CD classifies or qualifies as savings there. So remember that. That's tax tip number 2. Phone lines are still open, 954-792-1170. Any tax question you have on your mind or out there, anything related, you can call us. We will attempt to answer your questions and put some clarity there. If it's something that it's a customized answer, then we will take your information and then we can call you back. So I understand there's a caller on the line, so we're gonna go to that caller. Hello, thank you for calling. Hello, caller. Looks like we're having a little bit of technical difficulties. Caller. Hello, caller. It looks like we have a bit of challenge here, so we're gonna move on from there, okay? But the lines are still open, 954-792-1170, 954-792-1170. I don't know if the caller got shy. I'm not sure what that is. All right, tax tip number 3. This is one where gonna stamp a lot of you, because I know this is very uncommon. A lot of people don't realize that. Another commonly overlooked strategy by those who are near the limit on their itemized deductions. In the tax code, you have itemized deduction and you have standard deductions. So the standard deduction is established. Well, I understand we got back the caller, so let us go. Caller, you're on the line. Hello, caller?
Yes, I'm here. Are you hearing me?
Yes, I am hearing you clear.
Okay. My question to you is because you're talking about the healthcare deduction.
Yes.
And I'm wondering if you, okay, like I went to the emergency room and after my insurance paid my deduction, I had a balance of $600.
Uh-huh.
Then which I had to pay out of pocket, and I also had surgery on my eyes, which I had to pay like $800 after my insurance deduction.
Yes.
So I am wondering, I haven't filed my taxes yet. Can those be used as health deduction?
Yes, they can. They can be, but there's one challenge with that, and that's a great question. With the health deduction, like for instance, we were mentioning the health savings account. With the health deduction that's not from a health savings account, that will have to be filed on the form Schedule A. And the challenge with that is that the deduction has to be greater than 10% of your adjusted gross income. Let me explain that. So say, for instance, if you make 50,000 per year, and I'm just using that if you make 50,000, 10% of that 50,000 is 5,000. The deductions for health is that money, the amount will have to be greater than the 5,000.
Okay, and if that's the bill, because the emergency bill is what, 5,000 something.
Oh, then in a case like that, you may be eligible because, as I said,
qualified.
Yes, you may be. So you take that 10% and you look at what you made on that 10%, and any amount over that
greater than the 10%.
Yes.
Okay, because I have two deductions, and both of them is more than the 10%.
Okay.
When I put all of them together, it's much more than the 10%. So that's why I was asking you. Even though it's not a healthcare account, but then still I had to pay these balances after my insurance paid the amount that they required to pay to the health service provider.
Yes, it's eligible. So the health savings account is, but this is also eligible. That will be on Schedule A. You heard me mention the other one a while ago on line 25 of the 1040. This one now is on Schedule A, line 1. That's where that health deduction would be. And keep in mind also, because if you have the medical deduction, you have the high care deduction, anything medically related can be deducted, even vitamins. Believe it or not now. Some vitamins can be included in that. The premium you paid for the health insurance, a lot of things. Even the travel. A lot of times, sometimes people don't realize, even the travel too, because depending on the mileage where you go, sometimes we can include the mileage in that. So I think you have a great opportunity there. So make sure you have a good person doing your taxes and make sure those deductions are taken. Okay?
Okay, because I try to listen to you on a Sunday night to edify myself on these financial rules and gains and all of that, and I just heard you talk about it, so I said, let me call you and verify if that is considered.
Yes, it is. Thank you so much. Yes, it is.
Okay, thank you. Keep up the good work. I know a lot of people listening, so probably some people are scared to call.
Yes.
But it's a wonderful idea for you to be on the air and to educate them.
Thank you, my sister. Thank you for those great words of encouragement. And
wonderful.
Keep listening, and we're here for you, okay?
Okay, thanks a lot.
Take care. Have a
good night.
Have
Bye-bye.
a good evening. So as that caller, the question that she had there, we were talking about the health savings account. And I'm glad she asked that question, because remember, it's not just the amount in the health savings account that can be deducted. Right? It can also, the deduction can be on Schedule A. Okay? This, I tell you, I believe the fastest hour in the week is Sunday nights 9 to 10. Can you believe this clock? This clock is just flying. So I have to break again and go pay some bills. So stick and stay. We'll be right back with you. Welcome back. Welcome back. Thank you for sticking and staying with us. The phone lines are open. It's 954-792-1170. 954-792-1170. You can join us on the web. It's financialliteracy.info. Financialliteracy.info. You can put your questions. You can put your comments. We'll get back to you within 24 to 48 hours. You can email us support@financialliteracy.info. Support@financialliteracy.info. You can call us at 954-701-4730. 954-701-4730. And we are in the station, in the radio. You can call us at the station. It's at 954-792-1170. We are live on the air. We are here to take your calls. And going into tax tip number 3, that caller, that was a great question, and we're going to segue into that, into tax tip number 3, because it's in line with that, where she has a situation where she has deductible expenses that surpasses the 10% of your adjusted gross income. So she'll be able to claim those medical expenses. All right. But the tip I'm going to share with you, sometimes because you have the standard deduction. So for married head of household, it's like 9,350. Yes, 9,000. I'm looking at it here. For head of household, 9,300. Right, that's this. And married filing jointly, it's 12,600. Single is 6,300. So that is what you call a standard deduction. So take the person who is married filing jointly, 12,600. If their itemized deduction does not reach 12,600, then it doesn't make sense for that person to itemize, because they're automatically getting a standard deduction of 12,600 for married filing jointly. They're getting 9,300 for head of household. They're getting 6,300 for single. But there is a strategy. Here's the strategy. So say, for instance, let's go back to married filing jointly, 12,600. Say your itemized deduction reaches 11,000, right? But because the standard deduction is 12,600, you're not going to take that. You can't take it. It's better to take the 12,600. But if you have the cash availability and you can prepay your property tax, or you can prepay any mortgage interest, health insurance, charitable donation. Suppose you are planning to give something to a charity in January, just using it as an example. You're planning to give it in January. In December, you can make that advance payment and you'll be able to take that on your tax deduction. So keep that in mind. There are strategies. You don't just have to accept it where you say, well, I don't reach the standard deduction, so I'm just going to bypass it. And that's why we're bringing the tax planning to you. Planning is important, folks. And you know the saying, you have heard me use it. The persons who fails to plan to fail. So we don't want this for this community. That's why we are bringing financial literacy to this community, where we'll be able to brag that we are not in that 74% statistic that the government is talking about. Okay, so that was tax tip number 3. So tax tip number 4. All right, it's not uncommon for some taxpayers to not be in a tax bracket. Okay, all right. This one is going to be mostly for the seniors. I'm sorry. This one is for the seniors. Remember I said to you, some of them is going to be for seniors. This one is, say, for instance, if someone has money in a retirement account, whether it's a 401k, IRA, something like that, when that person reaches age 70 and a half, they have to take something called a required minimum distribution. So here's an example. So if that person is married, right? Remember I said to you, the standard deduction is $12,600. You have the personal exemption, which is $4,000. And that person gets a required minimum distribution of $20,000. Because the standard deduction and the personal exemption is going to be greater than the income they got, they will be in a tax bracket of 0. So in other words, their tax bracket is 0. So what's the strategy here? The strategy here is that instead, because if you're in that bracket where you still have room, you don't have to just take the 20,000 that's required. You can take 30 or in some case 40. Let the tax professional do the math for you, because you're still going to benefit where you're in that 0 tax bracket. So what we call there is bumping the bracket. You try to take as much money within that bracket so you still stay in there where you are not paying the tax on that. Okay? So that's tax tip number 4. I know that one is not a common one. That's not for everyone. That's for the person who basically age 70 and a half and is required minimum distribution. The phone lines are open, 954-792-1170, 954-792-1170. Tax tip number 5. This is for those of you who are investing in the stock market or whatever. This is capital gains. Capital gains. What happened with capital gains? Sometimes you may sell stocks. You may sell stocks or bonds or whatever, and you have a capital gain. You have a capital gain, so you're going to pay tax on that capital gain. But if you have some stocks included there that are worthless, where you're thinking, wow, man, that stock is not performing too well, instead of you paying tax on the, you pay tax on the gain, then you can sell some of those stocks that are worthless so that you have some losses, and that loss will offset against the gain, so you don't have to be concerned paying the tax on that. So that's another strategy here. It's one of those, again, where that's not for everyone, but it may be for a friend, a family member, and you can share with them, hey, guess what? I heard this on the radio. This guy was talking about this. We can reach out to him. Financialliteracy.info. Go on the website, check us out. You can email us, support@financialliteracy.info. You can call us, 954-701-4730. 954-701-4730, and we'll address those questions for you. Right now we are in the studio. The lines in the studio are open. 954-792-1170, 954-792-1170. We are on every Sunday night from 9 to 10. That's just 1 hour, but you have 24/7 access to us via the internet. You have that to us. Financialliteracy.info. Email us, support@financialliteracy.info. I am telling you, this clock is just jumping. I have to break again. I have to go pay some bills. So stick and stay with us. We're coming down the home stretch. Thank you. Welcome back. Thank you for sticking and staying with us. We are down the home stretch. We are in the final quarter. We got 4 more tips to share with you. The next one, this one is not related to everyone either, but it may be related to a family member or friend. It's called decharacterization of Roth rollovers. Oh my gosh, what does that? That sounds so eloquent and so 50 cent-ish. All right, what that is, you have the option to take a traditional IRA and you can roll it over to a Roth IRA, in the sense that if you believe that the taxes will be going up in the future and you have the wherewithal then you can roll over money from your traditional IRA to your Roth IRA. And then when it comes over to the Roth IRA, then you will never have to pay tax anymore in the future. So what this decharacterization is that if you make that decision to roll over some money this year, right, and you did that, say, in 2017, so you're now you're filing your taxes in 2018 for 2017, but the tax rate went down or anything of that matter, what it means is that you have the option. You can change your mind before October 15th in 2018. Yes, so just because you made the decision to convert in 2017, it means that in 2018 you can still change your mind. That's one of the great benefits we have gotten from the government in that sense, in that you can change your mind and go back to your status quo. So keep that in mind. Tax tip number 7, capital gains. We spoke a little about capital gains before. A lot of times people believe that, well, the capital gains tax rate is 15% or 20. But that's not quite true. It's partially true. The capital gains tax rate it's on a sliding scale based on what your actual personal tax rate is. What does that mean? Say, for instance, if that person tax rate is 0%. Remember, we're talking about that person that based on their income, their tax rate is 0%. If their tax rate is 0%, then their capital gains tax rate is 0%, because the capital gains tax rate will never be higher than what the person's personal tax rate is. So it's the same way where if that person personal tax rate is 10%, the capital gains tax rate will never be higher than their personal tax rate. So keep that in mind. And what that means, even if you don't understand that as it relates to capital gains, it just shows that there are many things out there that you may not understand. So I encourage you to get a professional to review your stuff instead of trying to. Sometimes we try to be penny wise and pound foolish. We go and we buy a software for $29 or $39 and we try to do the tax return ourselves. Or even now you have these sites where they're like saying, oh, you can come and do your taxes for free. Folks, keep in mind, please remember, you know, you're going to go do the taxes for free. You are going to get the quality of what you're going to put in. So be aware of that. You know, you have different sites where you go, you can do the tax return for free. Just be careful of that. I just believe you should get professional advice. Okay. Tax tip number 8. All right. This one is also, there is a lot of misconception about this. This one is, if you find an error in your tax return, should you amend it? And the misperception out there is where someone will say, well, but if I do an amended tax return, then the IRS is going to look at me funny and they may say, and there's going to be pushback. That's a myth, folks. There's no such thing like that. If you amend your tax return, it's not a red flag. Let me repeat that. Just amending a tax return is not a red flag. You can amend your tax return and the IRS will process your tax return. Okay? So don't be intimidated about amending your tax return if there is something that may be beneficial. Right? So just remember that. Tax tip number 9. And remember, we're just giving you 9, but there are many out there. The tax code is ever changing. It's not a static thing. It's a moving thing. So it's changing year to year. So what you see this year doesn't mean it's going to be next year. And sometimes what's there next year is gone. And what's not there sometimes will be introduced next year. So just keep that in mind. The phone lines are open. 954-792-1170. 954-792-1170. We are in the last 5 minutes. So if you have any questions out there, call us, reach out to us. We can address your questions for you. If not, you can reach us on the website financialliteracy.info, financialliteracy.info. The email address support@financialliteracy.info, support@financialliteracy.info. Remember, I'm Hubert McIntosh, your CPA, a member of SOFA. SOFA is a Society for Financial Awareness with one mission: to help eradicate financial illiteracy in America. I've joined with SOFA to come alongside this community so that we can help to eradicate financial illiteracy. FINRA published a statistics 2 years ago that Americans are 74% financial illiterate. So let us not caught up into that, okay? So with that being said, we are at March 19th. Some of you have already filed your taxes. Some have not yet. This year, just to remind you, the tax deadline is April 15th. But because April 15th falls on a Saturday, normally when the tax deadline falls on a Saturday, it moves over to the next working day. But this time it happens that the next working day is not the Monday, which is April 17th, because April 17th is also a national holiday. So it falls on the 18th. So the tax deadline this year is April 18th. And I'm just sharing the deadline with you. I'm not telling you to wait until the 18th to file your taxes. You don't need to wait until then. But if you have to, you have to, and you'll be able to file an extension. So keep that in mind also. If you're not prepared to file your taxes, you can file an extension, So we are here every Sunday night, 9 to 10, financial literacy, and the website. We have shared the website with you. What we have done, all the shows that have been done since January 1st have been posted on the website. You can go back. We have done mortgages, we have done insurance, we have done tax planning, we have done college education, we have done qualified plans. So what we're going through an entire curriculum of almost 32 different topics, whereas, to bring you up to speed in the financial arena. So we're going to talk about much more things. We'll have topics where we specialize. We're going to talk about 401k, IRA specifically, and we're going to go further into that. We're going to talk more about mortgages. We're going to talk about getting fiscally fit, planning your budget, helping you with credit. A lot of topics in the financial arena, because our purpose here is to serve you. So if there are any topics that's on your mind, you can also go on the website, you can mention it there, you can make a comment, point out to us what you'd like to know, because our goal here is not for us to just be pointing out topics to you. It does not make sense if we're talking about topics that's not relevant to you. So we would rather teach on topics that's relevant to you. So let us know. Give us your feedback. Financialliteracy.info. That's the website. You can go on there. You can put your questions. You can put your comments. You can email us at support@financialliteracy.info. support@financialliteracy.info. You can call us 954-701-4730. 954-701-4730. We are here to serve you, and we thank you for joining us every Sunday night. We know that there are many other things you could have done, could be doing, but you have chosen to join us. We want to thank you, and we want to let you know how much we appreciate that. We don't take it for granted that you took 1 hour out of your schedule to join us. So we just thank you, and we will be back with you next week. It's Hubert McIntosh, your CPA, a member of SOFA, the Society for Financial Awareness. Thank you. Have a good night, and we will see you next week.
Literacy with Hubert McIntosh on Waves 1170 has come to an end. Don't be mad.
He'll be back next week
On
www.waves1170.com.
Hubert McIntosh is a member of the Society for Financial Awareness, www.sofausa.org,
Promotional consideration provided by
LifelineTax.com, the Remap Accounting Firm, the Wealth Management and Distribution Group, and the McIntosh Insurance Agency.
Financial Literacy on Waves 1170 AM.
Is a digital media production by Hubert McIntosh.